Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap. Our morning leap is our pre-market session where we take a look at the market, take a look at the structure, take a look at the macro to the micro. Then we drill down and determine where our trade levels are going to be, where our targets are for the day, and what our main hypotheses are. Quantum Leap is a subscription trade room. We do this morning session each day, and then we do live trading and analysis during the course of the day. If you want to get more information, send me an email at quantumleapfutures@gmail.com or give me a call 647-545-8065. My name is Doug McKay. I'm the founder of Quantum Leap. If you want to watch more of these videos, do a search on YouTube, and please follow me on Twitter at Crazy2. Okay, before we get going, got to do the stupid legals, so let's do them. This information is for the purpose of educating members who want to expand the knowledge of the business. Trading is not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used for trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Whew. Man, I should be a speed reader. Okay, let's do the news. So unemployment is up in Canada. No surprise there. Went from 10.5 to 12.1. Went from 6.9 to 7.1. Import prices in U.S. Got a little bit better, minus 0.5 to minus 0.1. I should say a little worse. And then later we have FOMC speaking at 9:10 in about 30 minutes. So see if that does anything. 10 o'clock, we've got wholesale inventories. It is the beginning of the IMF meetings today, so we do have some headline risks if we get anything coming out from the IMF about the debacle of the world currencies and solvency of countries. And then, of course, we've got Bank of Canada Business Outlook Survey at 10:30. And then Evans speaks at 1:30. So quite a bit of news today. It is a Friday. It is a holiday weekend here in Canada, so I'm not going to be trading today, but I wish all our Canadian members a happy Thanksgiving. And on Monday, I will be here in the morning, but again, I won't be trading during the day. Okay, so yesterday, our main hypothesis was a rotational day with an upside bias to go up and test the 2000s. We were using these three levels, the 81.50, the 83 and a quarter, and the 85.50 that I was adding into a long and building a position to get long and run it into the afternoon, and it was just a beautiful trade. We had our FOMC came out. Our FOMC number is 1988.50. And then, of course, Marvin caught this one, which was a great catch, and he picked up the possible cup and handle. Actually, when he caught it, there was no cup yet, so we measured it out. It gave us a beautiful cup and handle, and then, as the market so often is, it is just poetic and so many things that our 20-day ATR upside target at 2008.75 just happened to be right there at our 100% target, our extended target on the cup and handle. So this was a beautiful catch by Marvin, and I traded it. It took, I built I was running 3 contracts. I bought 3 contracts, and then I just held on. I dumped it out at just in front of the 2000, and then I got back into the trade, and I ran it up to 2005. I didn't get the whole move into the rule of 10. Of course, last night Marvin was sharing a whole bunch of things. And basically what I was saying is, and it was way back here, I said the longer we hold above the 2000, the higher the probability that we'd go and complete the Rule 10. Came up here, put a triple top in up here, rolled over, came all the way back down to 98.75, put a double bottom in here, and then rallied back up. And of course, we've made new highs. Triple tops rarely hold. So we broke above that, and we're currently trading just above it right now at 2010 with a overnight high off the news at 2013.75. Okay, before we get too deep in our analysis, let's take a look. I always like to start my day, as you know, with just reviewing where we are in the trends. I use a candlestick chart with a 9 EMA and a 20 SMA. I'm looking for slope and separation and where the trend is being challenged or going into consolidation. Of course, we've got this pattern here, which is setting up very similar to this one right here, where we rolled over. We came down, broke below the 9 and the 20, held again below the 9 and the 20, now coming up and testing the 9 and the 20. So this is going to be a key inflection point for us, is going to be right here in this area. If we pop up some more, we could get continuation of the trend. We don't know which way it's going to go, but the trend itself has been challenged on the monthly. We had this nice strong move down on the weekly, and we had a nice strong downtrend going with slope and separation. And then so far this week, we've come up and challenged that, and we could close above the 9. The 9 is sitting right here at 1980, so we have a good probability that we're going to close this week on a positive note above the 9. Could even come up and test the 20. This level right here, okay, at 2035 to 2036 is got a lot of confluence. So pay attention, write that number down in your journal. That is a possible destination. Our upside ATR target today is this 2036. The test of the 20 SMA is 2036. The 50% of the significant breakout candle is 2035.50. So we got a whole bunch of things there, and there's a couple other things there as well, but I'll get to them in a minute. But the downward trend is being challenged on the weekly. Going down to the daily, we have the start of an upward trend with slope and separation. We do have a naked cross right here at 1939, 38.75, but it is on the daily, so I wouldn't put a lot of weight on coming down and testing that today. But sometime in the next couple of weeks, these naked crosses rarely get left unretested. Going down to the intraday to see where we are and trends coming into the RTH session, you can see that this upward trend on the 4-hour was challenged, and then it's got continuation. Now, I want you to pay attention on this too. It's on the 1-hour. I'm going to go down to the 1-hour. We've got a possible megaphone pattern setting up. And we just broke it to the upside in the last few minutes. So there's your megaphone. A break above gives you continuation. If we come down and break below, usually it's a pretty strong move down on a megaphone. But either way, it's still a valid pattern with a measured move. And if we measure the move, it's the easiest way to do that. Do it with an extension and see if I can do it this way. See where that 20, I'm telling you, it's just like this number is popping out in a major way. There's that 2036 area again, 100% of the measured move on a breakout of the. Now I don't consider this to be a breakout. This is what we call a false breakout. You got to have the close above. But if we close above, you've got a measured move up into the ATR target and a retest of the 20 SMA, a retest of the 50% significant breakout candle. Don't know if it's going to happen. We just want to make sure that we pay attention to where these possible patterned and measured moves are. Marvin was talking at great length last night about measured moves and paying attention to them. As you know, I pay attention to them very closely. But the 1 hour, again, same as the 4 hour, was tested, but now continuation, we're getting slope and separation to the upside. Going down to the 30-minute, again, we came down, we created the tech gap. There's a triple bottom down here, so watch this 1998. We get down there and we come close to it, look for it to be broken and challenged, and I've got some targets to the downside. I'll talk to you when we get to the composite. But so far right now, we've got slope and separation to the upside on the 30-minute, on the 15-minute, same thing, slope and separation. We do have, there's another area just below us, which is in the 2005 to 2003 area. We've got a couple naked crosses down there. We've got a naked cross on the 15-minute, write it down in your journal, 2005 and a quarter. But again, slope and separation on the 15-minute, trend is continuing. And then on the 1 minute, you can see we've got, I'm sorry, 1 minute. On the 5-minute, we've had a pretty strong upward trend. FUBAR, Mr. Sneaky, tech gap, come down, close the tech gap. If you haven't learned this pattern yet, okay, talk to me about it, because this is a very powerful pattern, especially on gold on the 15-minute. But on the 5-minute, on the ES, it's also a very powerful pattern. Would have been a beautiful short on this candlestick right here, come back and close the tech gap and possibly come down and test the 20 and possibly create the beginning of a downward trend. But right now, the trend is being challenged, but we haven't broken the 20. We could pop up back above the 9 and get continuation up. Okay, so that's what we're looking at in terms of the macro to the micro and the trend. Let's take a look at the macro and the structure. Of course, we've been tracking this micro composite VPOC, this one right here, that started on the range breakout, the significant breakout candle, and we created a value area at 72, 75 high and 1890, 150 low. We've been chopping around in this area, maturing the longer term price acceptance. We have tested below, tested above, tested below, and then we gapped up, accepted value at the high. The value area high is actually increased. It was, when we broke out, it was at 68.50, but because we've been trading in here, creating more volume, it's shifted up. But when we came up here at 72.50, we had broken outside of value and accepted price higher. They came down here, they gapped up, came down, accepted that value at 72.50, and then yesterday we got the continuation move on the breakout. We're currently trading 2010.50, so we are, if we hold above this CLVN at 2009.75, we're going to open outside of range and outside of value. This is pretty thin right here on the microcomposite of the 2-day. The 2-day price acceptance is at 82.75, and we're likely, if we get back below this 2009.75, to come back in to the 2005 area. We've got that naked cross. We got another naked cross on the 5-minute, 2002, with the CHVN here at 04 and a quarter. So likely get a move back here today to test in. If we don't hold that 2000 level, then look for them to come down, challenge the other side of the balance below at 99.50, and then anything below 99.50, then I'm looking for a bigger move back towards the 82 and 85 area with first target at 95, first support at 91.50. If we hold or dip in to close the gap and then run, we do have a gap close above us up here at the 1550 level, and we're going to measure move right now up to the 17 level. But one of the key levels above us also is going to be this 33 and a quarter with 27 just below it, because if we get above this 27, then I think we get the bigger move into that 35 and 36 level, which is, this is our first significant breakout candle. This was the breakout of value. This was the breakout of range. So this is the second candle, and I always look at the 50% retracement of the significant breakout candle, which is up here at 20.35.50. I think that we've had a big move, that we've got to come back and do some repair down here, but obviously you've got to watch to see if we get some initiative buyers stepping in, and if we hold above range prior to the RTH open. We've got lots of time. We've got another 30 minutes, so they could come back in here and we can open up inside of range and inside of value still. So let's go take a look at the overnight, start moving our numbers over to our chart and setting our levels up. Obviously, overnight low is down at 98.75, just above the value area high from yesterday. And then our overnight high is at 2013.75. I take this doesn't need to be here. Oops. Take these off. Okay, so we've got an overnight high at 2013.75. We could still put in a new overnight high. Also, we could put in a new VPOC, but right now I've got the VPOC at 2005. We got that naked cross at 2005. That's why I was pointing that out. We don't need this, and we don't need this, and we've got the overnight VPOC currently at 05. I think that it probably will shift if we stick around in this area. Possible shift numbers are 11 and 0950 or 0875. If it shifts while I'm talking, can somebody please let me know? We have this LVN right here at 2007 and a quarter. I'm going to be using that as a trade area. It's also our close, just above our close at 2007, and there's another one down here at 0175. 0175 is where we start. This is this LVN right here. This is where we start this, basic, thin area where we ran up through range yesterday and got range extension, I should say. So I'm going to use that as a trade area. I'm going to mark it as a trade area for two reasons. One is we've got the overnight low and the value area low sitting just below us. So it'll be, if we leave this 2013.75 overnight high and we get back inside of range, then I'm expecting them to come down and take out the overnight low and test this value area. If we break the value area high, then I'm looking for us to come back down into the 91 area, probably with the first target being 93.75. So I'm going to use the value area low as a continuation and continue to add to the position short coming into the September Fed number. Our Fed number yesterday was 88.50. Remember yesterday I said that we'd likely, work our way up into that 91 area prior to the Fed, and we did exactly that. This is our October. All right, so look for them to, if they get inside of value, to come down here, and I would target the midpoint 93. You could target the 92.75, but I'm really looking at the 93.75 midpoint for a half back, and just bring this down here. Take a look at our levels here. You've got the 95 as well, so I would look to fund any short, okay, before you get into that 95. Look for continuation down. And then I don't think the 91 is going to be a strong support area. It is at the VWAP though, so look for possible responsive buyers stepping in on this area, but I'd be looking at this LVN right here at 89.75, just below it. Okay, and then below that, then we get into this lower distribution from yesterday, and I would be targeting 85, which was where we tried to hold value the last time we broke out of the microcomposite value area. So I would use 85 as a target, and remember, trade levels, for those that are new, trade levels are targets and areas where I'll add into trades. Targets, I'm just looking for targets. I won't add into a trade there. I'll scale out. And then below the 85, if we don't hold the 85, then you got to be looking for them to come down and take out the naked VPOC here at 82. And you can see that the 2-day microcomposite VPOC is right here at 82.50, as well as yesterday's naked VPOC, and are open from that day. So going to be a big area down here. And then below that, there's really nothing down until you get down to the 79.75 CLVN, with the CHVN just below at 78.75, and that's our range low. But we've got our value area low here. So I'm going to split the difference, okay, and I'm going to use this range between the 79.75 and 78.75 as a trade level. I don't want to get long unless we're above the 79.75. I don't want to get short until I'm below the 78.75. And then our ATR downside target, based on our current overnight high, is down here at 76.50. That can obviously is dynamic and will change with any range extension to the upside, but that's the current target. And then below there, we've got the 72. It's now shifted to 73.50 or 73.25. And this is going to change my line in the sand for lower price discovery up into this 70.25, this CHVN. If we don't hold 70.25, then I'm looking for a much bigger move down and price discovery down into these lower targets, with the next big target, okay, down here at that 52. That's this area right here, 52.50 area. But I don't think we're going to get down there that far today. I think we could get holiday drift up. We're coming down and we're almost challenging the range high. I'm not going to use the range high today. I'm going to use that 07.25 as my first trade area, because I want to make sure if they dip in here, they're going to push through. They could just push down to this 07.25 and bounce off of it. To the upside, I'm watching the 975. I'm just going to make it 2010. If we get above 2010, then I'm looking for them to push up, take out the overnight high, and this this naked close here at 2015. And then just above it is 1750. Now, we did have a measured move. I don't know if it's still valid. Let me just check it. All right, so it's been violated, so there's no measured move right now, so don't have to worry about that. We got the Keltner center line sitting right here at that 2009.75 trade area that I just identified. Our overnight VPOC has shifted, so let's shift that up, and our overnight VPOC has shifted. What did I say it was? 0950. Right where we're trading right now. Didn't mean to put it there, sorry. Come on. Okay. So we've got the CLVN at 2017.50, and then let's take a look at some of our numbers above there. Above 17.50, we've got the 21 area. I'm going to use 21 rather than, I already have it in there. Let me do this because I wanted to. You can use 21 or 21.75. I'm going to be using 21 myself. And then you've got a value area low at 24.50 and a value area low at 20, or a range low at 25.75. So I'm going to split the difference there and go 25.50. And then above that, you've got 27.50. And then anything above 27.50, I'm looking at this 30.75 and continuation up into this cluster area. We've got the 20 SMA, we've got the ATR upside target, 50% of the significant breakout candle. And just above that, you get the CHVN as well. Just above that, you've got the 39.75. with the next big target above us up here. You've got 41.50 and 43.75. And then we have the 48.25. I don't think we're going to come up this high today. Just got to prepare for anything. And then a very important level above us is this. Anybody tell me what this is? Nobody? It's our year open. And we get up, oops, I don't know why that T always has a tendency to stay there. We'll get up here, we get into a positive year for the 7th year in a row. Very rare. All right, so I'm not going to mark anything any further. My main hypothesis is if we hold above the 07.25, or we dip back in and we hold the 2000 to rotate up back through and have a rotational day with an upside bias. Or if we find initiative buyers right off the bat, go up and take out these numbers. Those two are basically, within, call it hypothesis 1 and hypothesis 2. Below the 2000, then I'm looking for a test of the value area high, and once we're in inside value, then I'm looking for a rotational day down back towards the 82 50 level. And if we get below here, then I'm looking for a bigger move down to test the key line in the sand and probably put in an interim top, for the month. Anyway, that's what I'm looking at. That's going to complete our pre-market session. I'm not going to do gold today. I've got stuff I got to get done before I leave. So I'm going to complete this. I'm going to turn the room over to Marvin today so that you've got somebody that's going to, whoa, what happened there? Sorry. Somebody that can moderate. And offer some guidance and some wisdom. But don't forget, this is a self-organized learning environment. The more you engage, the more knowledge we all gain. As always, trade well, trade safe, and we'll catch you on the flip side.